Morning everybody, it's Christian from Serene Education with the 4 majors analysis update for the 25th of September. Hi guys, hope you had a fantastic trading day yesterday. Just doing some mentorships, so I was not available to do the video yesterday, so apologies for that. But let's have a look and see what's been happening on the markets. So how did we do last week? Let's have a quick look at the weekly. Closed last week, very indecisive, well nice, almost a bearish harami after a noticeable up move. And clearly we've seen a pullback of 50% of the previous week's candle. Notice price just sitting tentatively on the 50-period moving average. However, the start of this week, you can see that price has now taken the low of the previous week, or last week, and moved lower quite steadily. The CTC on the other side still remains negative. However, we have two parts to our positive blue arrow and the blue candle in place. So what's it doing on the daily to give us that candle? You can see, well, there's a massive up move, a genuine move to the upside, and subsequently, past week or so, we've had a nice pullback. Indecisive candle to start it all off with, a little indecision, and then we had this little bearish candle to the downside, forming almost an evening star formation, indecisiveness, and then moving to the low. There being the 1300, a major price support and resistance level. I've gone for this level here primarily because through the first part of this year in particular, we saw price finding a lot of support along this area here. A lot of consolidation, price hesitating at this level and bouncing to the upside on every occasion that it attempted it, bar the one that happened in May when we saw the breakout, which saw this massive downside move and the start of all this negativity that we're seeing short term. However, just recently we've had a nice move to the upside after a beautiful correction in July, which is seeing price moving higher, and fundamental news really complementing that, with Draghi saying that they would help purchase bad debt from countries that were in a dire state. However, they had to do a number of things in order to get that that bailout funding. That's gone down quite well. We've had a number of countries around the world, including the Fed, also announcing quantitative easing part 3. The Japanese government also doing, I think, quantitative easing part 8, funny enough. But anyway, so we've seen a massive move to the upside. However, we've seen a correction recently, and in breaking that 1300, I would like to have expected a pullback, which happens most of the time when you see a breakout to the upside. Over here, trading below above the institution moving average for the first time since September of last year, funny enough. So we've got a full year where price has been trading below this institution, so a negative setup. You can see a lot of negativity in that down move, so more red than blue. There are one or two areas of blue, however you can see the majority of that being red. However, just recently in September, funny enough, we've had that breakout and a rally above the institution for the first time in one full year. Now, as long as it remains above the institution, then the overall sentiment is still generally looking positive upside, but you can see in the near term we've had a move to the downside, and that has broken a major support and resistance level in the shape of the 1300, because that was a very noticeable correction or consolidation area for the start of this year. So we actually went into that support after that pullback with an indecision candle. The next candle we would like to have seen actually forming a bullish engulfing candle, or a nice hammer, follow that with a bullish engulfing candle, but that failed to materialize, and we saw this negative candle closing lower and lower than 50% of the candle range below that 1300. Friday we saw this pullback. However, by the close of the session, it actually closed lower on the range, and then that subsequently pretty much told us that price was now finding resistance, and sure enough, what we're seeing now is price falling to the downside. So where to? Where could this go to? Well, if you take the all-time low, the start of this upside move that we saw here in July, all the way to the high currently that we saw in mid-September, you can see price is now pulled back and it's now attempting the 23.6 fib retracement area of this initial major up, this major correction. So get below that, then we should be targeting the mid-range of between 23 and 38 would be the institution moving average here at 1280. But otherwise, we could see price, if price fails to find support at 23, then we could see it initially, well, our daily falling all the way back down towards the 38, which would bring us back towards this intermediate trend, which is below price as we speak. So that would be the immediate trend here at 38.2, which would bring us back towards that 127500. And then if you didn't find any support over there, then it would obviously rally back towards the 50 period, 50%, the 61% etc., all the way back to the downside. So if we don't see a close below the 23.6 today or the next couple of days, we could see a price reattempting 1300. So if we get a break below the 23.6 quite soon, i.e. this morning going into the US session, we'd like to see resistance going through to the US session, so we could see that price continuing its move to the downside towards these levels. Gone to the 4-hour chart, you can quite clearly see that hesitation, or that almost, you know, this failure to move any higher here. A lot of two particular candles really standing out here. These two exhaustion candles at a clear area, and then we saw consolidation after the first exhaustion candle, and then we saw another exhaustion candle of similar size, this time even more pronounced, and then we just seen price fall into the downside. This consolidation back towards 1300 on our 4-hour. However, we didn't see price really moving with any gutso from that, and then we've seen price now forming intermediate swing lows on our intraday time frame. So swing low, and you can see quite clearly here in the last 4 hours, price really moving back towards that 23.6 and attempting it again after yesterday's 10 a.m. Area of consolidation. You can see we actually sold into it, then we saw an indecision candle for a little correction candle, and then we've seen these tiny little pullbacks along the way. However, the last 8 hour, well, the start of the Asian session, we've seen price actually falling lower now into the 20.6. What we'd like to see now is to see a genuine break below that, because if we see a nice break below this will definitely confirm that we should be still looking for further downside movement following the intermediate trend, and we should be targeting the 1275, which would bring us back towards that all-important institution moving average. Our relative strength index is way below, well, definitely passed below the 50% line and showing the negativity intraday. Next pair up is sterling against the US dollar. Here on the weekly, you can see price is headed up into this price support and resistance level at the 16,300 mark. So price has come unstuck now at this major high, and we've seen a prior week of indecision. So we have a doji last week, and this week we have also another we had a spinning top last week, apologies, and now we have a doji this week. So all happening at a major high here in the shape of this 2-week consolidation through April and May of this year at 16,300. So we move to the daily. What we should see is that doji coming in the shape of a number of indecisive candles, and sure enough, you can see that we have a hell of a lot of spinning tops, an exhaustion candle here, a major exhaustion candle here. However, to see this as a major resistance level exhaustion area, we do need to see a bearish engulfing candle now to complement that that's shooting star, or this exhaustion candle here at the same area of resistance at the 16,300. So what we're looking for, and this is where you need to be patient, is for that confirmation candle to appear. If we get a nice bearish engulfing candle here, that will generally conclude that we are now at a resistance, and we should see price pulling back, and then we could actually work back looking at Fibonacci retracement to see where along the pull, or how far the pullback is likely to occur going on those Fibonacci retracement areas. The only other thing that could actually cancel this is a bullish engulfing candle, and that bullish engulfing candle would have to close higher than the 16,300 to actually cancel these or these negative sentiment indecisive candles at a major resistance. Okay, so there's one or two things here. You got to either wait for a bearish engulfing to complement this set of candles formations to confirm this is genuine negative sentiment at a resistance level to see price moving lower, or we want to see a bullish engulfing candle to actually cancel all this indecisiveness at the underside of a resistance to confirm, yes, we're still looking for potential highs, a break of a major high, then we would see price really rally to a further resistance level to the upside. So yeah, and the third point is patience. We've got to have patience on this pair, because it's just not going anywhere anytime soon unless we get those confirmation signals. So on our 4-hour chart, you can quite clearly see price hesitating as we headed into this 16,300 as major resistance. We had this little evening star formation here on our 4-hour chart, and price pulled back, however not really moving away with a lot of momentum, and in doing so forming this consolidative support at the bottom end here, roughly around the 16,200. So we would like to see price actually breaking higher or lower than this consolidative range. So if you wanted to, you could take the little box pattern. If you wanted to, just draw a box at the top. So between 16,300 and 16,200, there's a whole 100 pip range. So all you intraday traders, there could be something here for you to trade. If you like trading squeeze patterns or consolidative patterns, this could be something that you would like to look at. However, if you're looking at the larger time frames, you want you're looking for that candle, that confirmation candle that's going to give you that indication what's going to be happening monthly. So either we want to see a nice bearish engulfing below the 16,200, or we want to see a nice bullish engulfing above 16,300 to give us a conclusion. So if you wanted to, you could actually put in two alert lines. So a horizontal line above 16,300 for an alert for price to close higher than that, or alert below the 16,200 for a close lower to give you an alert that we should be seeing negativity. And if that was the case, the downside, then we should be targeting the ultimate 200 period moving average below. You'll notice that RSI in this time frame going into this consolidated range was in an overbought situation. Okay, so we saw we were likely to see price pulling back, and so sure enough, as price headed or reattempted higher highs, you'll notice the RSI has pulled back significantly, confirming that there's no true sentiment in this buying to the upside. It still remains above 50 though, so as long as it remains above 50, it's still positive sentiment. What we'd like to see, if this is to be truly bearish now or resistance above here, we'd like to see the bearish engulfing candle breaking below this consolidated range and the relative strength index dipping below the 50% line. Okay. US dollar Swiss franc, let's have a look at this particular pair. Correction. Last week, a nice little bullish Harami after a negative downside move. Now we want to see price moving to the upside. If this is genuine bullish Harami, we'd like to see price moving higher now after all this negativity to the downside. You can see that the US dollar has found a lot fallen in as many months. The past two particular months have been quite negative for this particular pair. And this is primarily after rallying into this 1,000 mark here over the last this year in particular. You can see a massive move to the upside since August of last year, rallying into this major support and resistance level, which came in the shape of the institution moving average, as well as this major consolidation here through way back to 2009, 2010, 2011. So 1,000, and then coming unstuck, bearish engulfing here, which looked quite negative, which looked very negative on our daily charts, and this started this negative move to the downside. So where is price heading to? We want to see where the pullbacks are likely to, the retracements. What we can take is the weekly low here all the way down in August of last year to the level here at 1,000, and you can quite clearly see where price is trading right now. We're trading at the 23.6 retracement, and we could see over September, November, December, or since that August low, you can see that price has hesitated here in the past. So this is genuine consolidated territory, and sure enough, we've had a consolidated week last week as we saw this negative sentiment or selling into the underside. Ideally, we would like to have seen last week finding resistance at 930, which would have concluded that we should have seen this as a negative candle setup, because now we've seen a breakout, the pullback, which has failed to find support above the 930, which is the 23.6, and that would have concluded the pullback, and then we've seen the continuation this week to the downside. However, that's failed to materialize, as we've seen a little Harami, bullish Harami on an area of potential consolidation, i.e. in the shape of the 930, which is the Fib retracement. So as long as it trades higher than 930, then we're going to see a pullback, a noticeable pullback. So if you wanted to, you could take a Fib retracement from the high here to the low here, and then see how far it's likely to pull back on our weekly within this range. So there we go. You can see it's testing the 923 now. So you could say to yourself, great, get above 924, the 9400, which is the 23.6 retracement as we speak now. Then we should see price rallying or reattempting the highs here at the 38.2, which would bring us back towards a prior consolidative range in the shape of this prior resistance level here, this evening star formation, and this prior support here in the shape of that, roughly around the 950 mark, which is the 38.2. So you can see now we're trading in this consolidated range between two Fib retracements. If this is going to be major pullback to the upside, then we want to see that acting out on our daily. Otherwise, if we get back below 930, which is our weekly Fib retracement, then we're looking for definite negativity, which would take us back towards these price support areas around here, this consolidative swing support here at the 890. So look at our 4-hour chart, or our daily, apologies. So we take the high. So we know that our weekly is the 930. So you can make that a nice strong dark color. So the black line represents the weekly Fib retracement, and then what we can do is take our high here to the low we had here just before we saw this consolidation with price moving higher to the underside of the institution. Okay, now you can see the 23.6 is the intraday, the shorter term retracement area, and that concludes with the 940, which happens to be the institution. So you can quite clearly see now price is traded below the institution moving average for the first time since, wow, September, October of last year. So now we've gone a full year, similar to what happened with the euro, funny enough. We've gone a full year where price has been trading above the institution, which concluded that we were seeing price moving higher, and you can see that we were actually moving higher over that period of time. Now for the first time we've seen price breaking lower than the institution moving average on our daily, which indicates now this is bearish sentiment. So that tells us for the last 200 periods, i.e. the last 200 days, we're trading at an all-time low, negative low, and that's constituted to this breakout of the institution, and now we're seeing price pulling back. If the pullback fails to break the institution moving average, i.e. if price using the institution as a support before now finds using the institution as resistance, then we should see over the next couple of weeks price using the underside of the institution now as a resistance level, and price will then move away in the direction of the breakout. The initial breakout being negative, price will move away to the negativity, to the downside again. And if we see a nice bearish engulfing candle here confirming a negativity, then we should be looking at price heading towards first target, the low, the consolidation low that we've seen on our daily, back towards this 925 area. So very, very important. Notice the CTC on the other side on our daily is negative. All our moving averages above price. The only thing we really got to worry about is that price is trading above this 930. And it's going to be moving backwards and forwards between this 930, which is our Fib weekly retracement, 23% of the major high. Okay, so if we get below that, 930 would be ideal. So if you can be really, really patient, all you guys over there that are looking to be trading long term, ideally we'd like to see a close below 930, which would genuinely tell us that sentiment is definitely looking negative long term. All your intraday traders, we could actually see failure here at 940, get in there on a bearish engulfing candle intraday and trade back towards this area here at 930, 92500. Last pair of the day is US dollar Japanese yen. Let's have a look at this on the weekly. We've had 3 consecutive weeks of really indecisive candles. We've had a lot of indecision candles, to be honest with you, but you can quite clearly see that price over a period of time has found a lot of support through this area here since June, July, August, September, leading into where we are now, and that coming in the shape of the 7800. A lot of prior support on here before, and if I zoom out on a weekly chart, you can quite clearly see that this acted as a clear resistance in the past of last year through August, September, October, November, December, heading into January, and then we had the breakout in February. So a lot of resistance has now formed a lot of support. Okay. However, you can quite clearly see a very indecisive end of last week. So we had a lot of cancels, one candle cancelling another candle, cancelling another candle. So you can see there's backwards and forwards, backwards and forwards. If you took these 3 candles here, guys, and you merged them together, that wick would still be there, and you can see a lot of candle wick on the other side, which would constitute to 3 weeks of very indecisiveness or indecisive trading, which would constitute a spinning top at a major support and resistance level. And you can see quite clearly what's happening now is you can see these highs are getting lower. So we're being squeezed now, guys. You can quite clearly see that price is being squeezed along this area to the downside. These consolidated moves higher haven't broken prior highs. Okay, so there's telling us that the sentiment is just genuinely not there, and subsequently price has been failing yet again and moving back towards a strong support here at 78. Now you can quite clearly see heading into the new week, this week, you can see price is now dipping. You can see there's very little wick to the upside, and you can see that price since the Sunday open on the Asian session has just been selling. There's just been clear selling from the word go. There's been no consolidative upside movement within that. So if you look at the daily, you should see that sentiment now. You can quite clearly see that negativity has just been dropping. Okay, it's quite clearly see that 78 now. You always must put your major support and resistance levels in, and you can quite clearly see that 7800 is now above price. And if it's above price, then you see that a major support and resistance level has been broken. We've seen it just recently. Okay, it's broken. All our indicators are negative. You can see that we've had lower swings heading into the setup where we are trading now. A lot of negativity. I'm just drawing the swings here. You can see from the highs, swing low, swing low, swing low, swing low, swing low, swing low. It's just swinging lower. Notice the institution on our daily is also above price, and it has been acting as a resistance level just recently. Price is failing to actually trade higher once it's been targeting the 78. So if it targets 78, it should realistically, as it's done before, found support and then bounce higher. And each one of those bounces has failed to actually really take price higher, and in doing so, finding resistance at the institution quite clearly over since the start of September. You want to see price now moving away from 78 at the underside of this price support to be confirmed now as new resistance, and price needs to move away as quickly as possible, breaking that magnetism that we've seen just recently. Here, Fed announcement of quantitative easing on Friday last week saw price really moving with a lot of momentum to the upside. However, are we going to see something really fundamentally actually telling us we should be looking for positive highs again? I doubt it, because you can see there's just nothing. Even that quantitative easing announcement from the Fed saying this we're going to be helping has really done not a hell of a lot to actually stem this negativity. We saw a lot of buying sentiment followed by an indecisive, followed by a bearish engulfing. So this is an evening star formation at a resistance level here at roughly below the prior swing low, and prices just continue to fall. So from now on, what we should be looking for is price to find resistance under 78 intraday, and for price to continue to fall towards our all-time price support and resistance level of 76, which is if you look at the weekly, 76 constitutes to the prior major support and resistance level through August, September, November, December. Through that same time period last year, we saw 78 acting as a resistance. A lot of consolidative trading last year. Could we see the same thing now as we see price breaking that on our daily? So we need to make sure that we are aware of these areas intraday. So you need to plot these areas of major support and resistance on your major or on your intraday time frame. So we know 78 is above price now. Notice the CTC, the counter cash system, is all in our favor with our moving averages above price and our histogram giving us that negativity. You can actually add the RSI just to confirm that the sentiment is genuinely looking negative, and you can quite clearly see that's the case. So now, as it stands now, 78 needs to remain as resistance, and then what we should be targeting long term is that all important 7600 mark below us. That completes my analysis for today. Hope you have a fantastic trading day today, guys. Please ensure if you are using this template to back it up with sound money management, and you have to follow the rules of this particular template. Those of you not using this template and like to just use my analysis overall, please make sure that you back it up with sound money management, guys. Okay, you can have the best trading strategy in the world, but if you don't follow it up with genuine money management, it will end up being a failure. Okay, so it's important that you follow the rules that you have applied. They've given you the reasons why you're trading it, and apply them regimentedly. You've got to be very, very strict. Keep your trading as mechanical as possible. Take as much motion out of it as possible, and you shall become very, very profitable. Other than that, have a look at the news announcement to see if there's anything that's really going to reflect on price action today. I've just noted that we've got Draghi and German Chancellor Merkel speaking today this morning at 9 a.m. GMT on the German industry event. Then they are meeting yet again this afternoon at 12:30 GMT at the meeting to discuss monetary union. So we're going to see a lot of talk, guys, and I think a lot of that talk is going to be around Spain, potentially. The word going around that they're actually putting together, the Spanish government's putting together bailouts, a bailout pack, or asking for bailouts. So those could be the main topics of choice at these particular events. Other than that, if we see, we have the consumer confidence index this afternoon for the US market at 3 p.m. GMT. Other than that, we have not much else. There's one or two other announcements, but the most important ones I feel are going to be the meetings with Draghi and Chancellor Merkel. In between all that, we have the Italy to the bonds. It'll be interesting to see what bonds the Italians manage to sell. But other than that, those are going to be the most important topics of today. So be aware of it. If you're not in any trades, it might be quite interesting to see how price actually reflects on what the outcome is on those news announcements. Otherwise, keep it simple, follow the rules. Until then, trade serenely.